I used to think that the harder I worked, the more I'd win, but that mindset was actually the reason I kept losing. And what finally made me consistent had absolutely nothing to do with working harder. You see, I was glued to the charts from open to close, watching every candle and every tick. It was like this every single day. But the more I watched, the worse I got. My focus was scattered, my patience was gone, and my execution was hazy. And the worst part is, I thought that I needed even more screen time to fix it. But I was just doubling down on the problem, and my results got even worse. That's when I took a step back and realized I wasn't even trading. I was just trying to control the market and control my results. And that's what was crippling my edge. Because the market doesn't reward effort, it rewards precision. And precision comes from knowing when to engage with the market, but also when to do nothing. The best trades comes from less effort, not more. So in this video, I'm going to show you the lazy trading system that literally pays me to walk away. Before we dive in, quick disclaimer. Nothing here is financial advice. I'm just showing you what's worked for me. If you use it, do it at your own risk and size properly. Now here's a lesson I learned the hard way. The more you watch the market, the worse you trade. Every tick pulls a little bit more of your focus. You start seeing setups that aren't even there. It becomes a type of mirage. You second guess good setups and you also sit through the bad ones because you've already invested the time. You give literal hours of your life to a chart. For a trade you'll probably miss or fumble anyway. And I was no different. I'd backtest and analyze the market for hours, then spend even more hours on the chart. I told myself that I was gaining experience by watching the screen more. But deep down I knew it wasn't true. I just felt like I needed to be in control as much as possible. But the brutal truth is, the more time you spend trying to control the market market ends up controlling you. So I didn't need to watch more to trade better. I needed to prepare better so I could trade less. I stripped everything back, and as it turns out, it comes down to just 3 things. Now I barely spend any time on the chart, and profitability has gone way up. So let me show you exactly how that's done. The first rule is to do 85% of the work before the market even opens. So by the time you turn on your screen and start looking for trades, it should feel easy and light, even boring. Because here's how most traders approach the trading day. They open their chart a few hours before and try figuring things out on the fly. They look at the news and events for the day, then mark some levels and zones on their chart, then try to establish a bias and think about what the market will do for the day. This is already hours of time and energy spent, and the market isn't even open yet. Then when the market actually does open, they're watching every second of it, reacting to every candle, doubting themselves and changing their plans. And I used to be the same way, but now instead of spending hours analyzing the market before the open, I spend seconds, not even minutes, just seconds. That's only possible because I do 85% of the work beforehand, so I don't need to reset my bias and my levels and my plans every single day. And that work is in finding the right liquidity pockets, establishing the right bias, and having the right plan if it ends up going that way. This is a framework that only needs to be set up once. Not every day, just one time, and then trading gets simple forever. Because now you're reading the markets the way institutions do, not the way retail traders guess. Finding the right liquidity pockets means finding zones on the chart that institutions find important. These are levels that have high institutional volume and activity, and these are effective because they act like price magnets. They're not always pretty or obvious, but once you learn to see them, you realize the market basically rotates from one of these levels to the next, on repeat. Price doesn't move because you want it to move, and it doesn't move because of your patterns or indicators. Price moves because large players need liquidity to fill their orders. That's it. So those liquidity zones become your targets and entries at the same time. Now, I'll link a video here where I go in detail on exactly how to find and map out these zones, so you can watch later. But the beauty of it is, you only need to draw them once. The market has a memory, and these zones will keep being valid in the future. So once you have this layout, you basically have a blueprint of where the market wants to do business. And that removes the entire analytical process of marking out your levels that you need to repeat for hours every day. Now that part's already done. You don't need to think about it anymore. You've established the right liquidity pockets. Now we can start our day by going straight to finding the right bias. That leads us to our second rule, which is to know exactly what you're going to do before you engage with the market. Because if you don't know what you're waiting for, then you're not trading, you're just hoping. Staring at a screen with no plan is just disguised anxiety, and it's dangerous. Because the longer you sit there, the more you start manufacturing trades that don't exist. You'll convince yourself you see structure or momentum, when in reality you're just bored and want action. So now, about 5 minutes before the open, I build two simple scenarios. Just two. It's going to either be a break of supply to the upper supply level or a break of demand to the lower demand level. If we open in a supply and demand level, especially if the price is ranging at that level, then I'm looking for a breakout to either side. So I will either be looking for a break of this level to the supply level above, or a break lower here to the demand level below. Then I simply wait for the price to reach that level and enter the breakout trade from there. And if we were to open in between two levels in the white space, then the same plan follows. We want a break of the level above to the upper level or a break of the level below to the lower level. So I'm not there just staring at the price or reacting to every candle. I have my plan, which has two possibilities at most. Now at this point, three things can happen. Either the price moves to the supply level above and I take the breakout trade in that direction, or the price moves to the demand level and I take the trade in that direction. Or the price doesn't hit either of these levels and ranges in between, in which case I wouldn't want to take a trade anyway. So that's the importance of knowing exactly what you're going to do before the market opens. There should be nothing that surprises you. Now, of course, not every single trade is going to win, and you'll take some losses because that's normal. But you have a general expectation of what the price can do. And that takes away most of the chaos of the market and getting caught in situations that blow you up. Speaking of avoiding chaos, that brings us to our third rule, which is to set alerts. This is the one that actually makes trading feel effortless. The hardest part of trading is actually sitting through your trade while you're in it and watching every candle. You're anxious, second-guessing yourself, and getting emotional. There is no way around it, even if the trade is going your way. There's always the fear that it'll reverse. That's where most of your effort in trading goes. That's what actually drains you and exhausts you at the end of the day. Because sure, taking a win might make you feel a certain way, and taking a loss might feel a certain way. But that's not the part that bogs you down. What actually bogs you down is your screen time and the emotions you feel while you're watching that trade. Well, what if I told you that you don't have to do this at all? Your actual screen time only needs to be a few minutes at most. You see, since we're trading level to level, we don't need to constantly be watching our screens. We have our plan already, right? We know exactly what to do in whatever direction the market moves in. So we just need to set alerts at each level, wait for that alert to hit, and then enter the trade. Once we set our stop and target, we can just walk away. Our actual screen time is just minutes because that's all that's needed. And when you come back to your trade, whether it's a win or a loss, you don't feel drained or exhausted. You weren't glued to your chart watching price action or feeling those emotions. So the whole experience is smooth and seamless. And that's way more sustainable and scalable than staring at the screen all day. So look, you don't need more effort, you need far less. It just comes down to following the LCE method for every trade and keeping it simple. Most of the struggles we have come from doing too much and making it too complicated, not the other way around. Trading isn't a productivity game. It isn't about who's the most active. It's about who's able to make the right decisions when it counts. And we do that by doing most of the work beforehand, then having a clear plan before the market open, and setting alerts at exactly where you want to enter and exit. That's the simplicity that creates consistency. And by the way, this is exactly what I teach traders inside my LCE Accelerator program. We run weekly group calls where we break down trades and keep your process tight. You'll also have a private one-on-one chat with me, so you can get feedback or ask questions anytime. You'll get access to my exact level-to-level chart, the one I use every day to trade this framework. And you'll be part of a private community of LCE traders who trade the same system and keep each other accountable. So if you're interested, click the link down below to apply. And if this video helped you, then be sure to drop a like and hit subscribe, because I drop videos exactly like this every week. I'll see you in the next one.